Jeremy Harper here, just giving an update around the RBA July cash rate decision. So they met this week on the 8th of July. The market's surprised. They've decided to hold the official cash rate steady at 3.85%. There was a 97% chance built in by the markets that there was going to be a 25-point cut, taking the cash rate down to 3.6%. Did not eventuate. And interesting, this is the first time with this revamped monetary board that we actually saw the way the votes fell, which was 6-3 in favour of a hold, six of the board members opting for a hold, voting for a hold, and 3 for a 25-point basis cut. And I think it's really interesting if now we're not getting names of who voted which way, obviously for privacy reasons, but very interesting to understand that how would that look if you look at the experience of the board, and it's a new board, and now we're going to see exactly their experience come to the fore, and what does that do to the Australian economy. I think a really big takeaway for me as a small business owner is that a lot of this board is made up of people who have held very senior government positions in various industries. And so what would be interesting is how's their opinion formed? Is it actually finger on the pulse? How's the economy going? How's the Australian household? How's the small business tracking along? And I don't think that's come through in the vote. So that's my takeaway. So the rate's held at 3.85%. Michele Bullock, the governor, noted that inflation's in range at 2-3%, but they're going to be data driven. So they meet in August for their next decision. At the moment, the market is anticipating a cut at that stage, but the signalling out of that market update after the board announcement was that they will be data driven. So they're going to be waiting for the June quarter end inflation cut and see what that looks like. And for me, the concern is really around the fiscal versus monetary policy environment. So fiscally, the government is working in a different direction to the RBA. And so I think we're going to have some challenges around energy costs coming through the inflation, and some of those housing costs there'll be still incredible pressure leading this year. And then if we look at from a housing point of view and the policy that will roll out 1 January with the government supporting with the first home loan deposit scheme, that being expanded, that's going to put further pressure on housing in terms of the demand. And I think that will still continue to drive the inflation number. So I think there's going to be a little bit of uncertainty around the market now to say what will the RBA be doing over the next sort of couple of months or to the end of the year, because they were anticipating that cut. And if they're saying they're data driven, they'll look at the inflation. Also, the board did note that a lot of those household rebates that are coming through currently in the inflation readout will cease. So they sort of a wait and see approach. So very interesting. Some other things to note: they want to hold back some ammunition with what's happening globally. So if something does happen in terms of the trade market internationally, in terms of the tariffs, they want to hold that back to have that ability to cut to stimulate the Australian economy. Household consumption remains soft. That's been a common theme for some time now, and the environment around interest rates has been restrictive. Wage growth has started to subdue. So unemployment on a high level has remained quite strong. But if you look at the makeup of who's actually hiring in the Australian economy, it is filled by government demand. So that's something that will play out over the next 12 months as well. And you're starting to see that wage growth moderate. So that's going to come off. So it sounds like the RBA is really focused on this inflation, which at the moment it's throwing the markets out a little bit around the expectations into the future. Obviously, markets like consistency, and this has sort of caught everyone off a little bit off guard. So looking ahead, the next meeting will be the 11th and 12th of August. And again, at this stage, there is expectations that there will be a cut, but the language coming out post this meeting it's very much data driven. It's very much wait and see. Until then, we'll give you an update then. Thank you.